We've spent the last several episodes breaking down individual pieces of ICT trading. We talked about liquidity, market structures, fair value gaps, and basically everything in between. In this episode, we're going to put it all together, and you are going to write down your first complete setup. This is the ICT series with Dom to Bomb Trades, episode 9. All right, welcome to the charts. We're going to take it back to August 5th. So, the first thing we're looking for is liquidity. We have London lows, London highs, and previous day highs. This is the 15-minute chart. So, this is the liquidity that we are working with today on this day, August 5th. So, what are we looking for next? We're looking for a liquidity sweep. This is a perfect sweep. We came up and then we came down with no draws on liquidity to the upside that are recent, and we created a 15-minute order block. Now I'm interested. Okay, this is where I see, like, all right, we took out liquidity. I want the downside liquidity. So then we're going to drop down to the 1 minute. And let me scroll back out real quick. It takes you all the way back to today. When we come down to the 1 minute, we say, okay, now part one of my model is set up. We sweep the liquidity. Where can I fit my model in to enter? This liquidity was formed right around here on the 15-minute. So if you're not familiar with charts, these are the 15-minute candles basically broken down to 1 minutes. And then what's my next thing that I'm looking for? Market structure shift on the 1 minute. So we had a little bit of a structure going on, a low, a higher low, and then bam, market structure shift. This is where we had a shift at. And I will kind of type this out real quick for you, so you can maybe take a screenshot of it or take a look at it. Our market structure shift happens here on this third red line. So we are going to identify a FEG or IFEG where we can enter in on this trade. We have a FEG displacement here that goes up, and then bam, we get a 1 minute IFEG. Notice how this stops in the 15-minute order block. This is a huge rejection. We have pressure right here, comes back down, meaning there is sellers sitting up here that have sold. That 15-minute order block is in place and is valid. So we get a 1 minute FEG with a 1 minute down candle creating an IFEG. And to even have more confidence in this trade, the IFEG holds solid. So this is where we enter. This is where we enter in on the trade. And let me remove these real quick. So we would hit a short. These are forecasting tools, which are very helpful for me on finding ratios. If you go 1, 2, 3, 4, fifth one down, hit this arrow, you get long position, short position. Right now we're going to do a short position. You can enter in on this inversion, okay? I wouldn't be against that. And you're going to target London lows. So that's opposite draws on liquidity. So what do we have so far? We have our liquidity sweep, and then you have your 1 minute market structure shift. We have a displacement to the upside, creating an FEG heading to this 15-minute order block. We get the rejection. This FEG turns into an IFEG. We enter in on the trade. We're going to set our stop loss. So the stop loss would be above this swing high. I'll pause for a second. If the stop loss, if we break this swing high right here, okay, my trade, I would not be confident in anymore. This isn't a trade that I would want to be in. This breaking this to the upside would be a market structure shift to the upside, which would make me very less confident that this trade's probably going to work out. So that's why our stop loss is set right here, okay? And then we will obviously target market or opposite draws on liquidity. So the opposite draws on liquidity is London lows. So we have a 1 to 2 ratio. If we were risking $500, we would be making $1,000. And that is your setup. So try to write that down. I'll go over it one more time. We have a liquidity sweep to the upside. This created a 15-minute order block. We had a market structure shift on the 1 minute, displacement to the upside, a rejection at the 15-minute order block, a IFVG formed on the 1 minute back to the downside. We had a rejection in that 1 minute IFVG, so you could have entered here at the break of this FVG, or right here where we show that this IFVG holds true. We target London lows, we hold our stop loss above the swing high, and that's your trade. It can't get any better. Some people hold runners, okay? So if we had, let's say you had 10 micros, you sold 5 right here, or even 8. Let's say you sold 8 micros right here and held 2. This trade could have went farther down. You have this aftermarket hours right here. So you even could have held runners for advanced traders who are a little bit, it's more like an intermediate where you sell 8 right here, hold another 2 for runners, bring a stop loss right here for break even for those other 2s just in case it comes back up, then you're breaking even on those. But that's something a little bit more advanced. We're just trying to keep it simple, okay? And write that down. If you have any questions about this at all, write it in the comments and I'll answer everything I can. I hope this helps. All right, so this is it. This is your first setup. Write this down, keep it near you. You're going to look for this every day in the market, and it's not going to come every day. Your liquidity sweeps, market structure shift, enter in on an FVG or an IFVG out of that market structure shift, set your stop loss, and find your take profits, whether that's low of days, high of days, or opposite draws on liquidity. Keep this model near you. Look for it. Let the market come to you. You can't just find this in the middle of the day at lunchtime and hope for the best. And you don't need to take a trade every day, okay? Apply risk management, understand trading psychology, and you will be successful. So next episode, I'm going to try to just do random replays to look for these models live, and it'll kind of show you in real time like what that looks like. But have this set up, maybe go to the charts tonight and look for these, 6 things. Once you check these 6 things off, and that's when you know, okay, this is my model. And like always, we're going to make every single one of you guys profitable.